What's going on, everyone? Thanks for tuning into the video. I hope you had a wonderful day. So let's get right into it. So here's a chart of crude oil futures. So crude oil bounced 5% today, which is another reason why the SPY didn't fall as heavily as the other indexes. But I'll get into that in a bit. So crude oil bounced 5% today. We see that the MACD was extremely oversold. So it gave room, and we were outside of the Bollinger Band, which is another bullish indicator of a bounce, and that's what happened. And we bounced a little bit, which is why crude oil bounced, right? So what did that mean for the SPY, right? So the SPY, right, given the fact that all of the other indices fell heavily because of crude oil, basically the SPY was held up, and regardless, it still broke through the 388.09 level, which is the 38.2% Fibonacci level. It's still holding on to this support sort of trend line, uptrend line from March. It's still above the 50 moving average, and essentially the SPY just needs to hold above 384, 385 range for it to still remain bullish, really. All right, once we start crossing below that on the SPY, then that's when things become a little bit scary. You can start looking towards getting more puts, but the SPY is getting extremely oversold on the MACD as well. So let's see how long this downward move persists. The NASDAQ, the Qs, right? So those obviously, the tech sector got hit hard as well today. It broke the 314 level, and now it's almost back to the 310.90 level, right? Which is another very key level of support. This was the inverted head and shoulders pattern, the bullish pattern for the NASDAQ that everyone was looking at. So this has not yet been invalidated. If this, if the Qs essentially break down below 309, then it doesn't really look like an inverted head and shoulders. It would look more like a bear flag, right? And a bear flag is it's the opposite of a bull flag. It's a very bearish pattern. So, I mean, we just have to take it one day at a time. Let's see where the NASDAQ and the Qs essentially go. The IWM also broke through all of the levels of support. Yesterday, I went long the IWM right along this level of support. I said that the IWM, I said in yesterday's video, the IWM could bounce back to 220 to 221 and then would fall afterward. And that is exactly what happened here. It fell through all of these levels of support. It fell through the 78.6% fib level as well. And now the next downward target would be 207. So if that happens, then it can easily break 207, and then from there, it can go to 205, and then 201. There's a lot of downward move for the IWM. But one of the good things is that we are extremely oversold on the MACD. And usually when that happens, that means, there's still potential for it to move up. If the MACD line, if this MACD line, the blue line right here, was above the yellow, right, that would be very scary. But it's very oversold. So if this blue line was over here and it had to cross below, and we still had a huge downward move, that would mean that there is still so much more potential downward, right? So that's essentially how the Nasdaq's MACD looks currently. So the MACD on the Nasdaq, it just crossed below today. So this really needs to even out and get to a point where it gives enough steam for the upward momentum. That has not happened yet. So for the IWM, going back to that, yeah, these levels just really need to hold. It looks like there was early month rebalancing. Each month, essentially, 50-50 funds and hedge funds, essentially, they sell the winners, they sell the winning stocks, and they buy into the losing stocks because they have to have a certain percentage increase per month. So also 50-50 funds, they have 50% in stock and 50% in bonds. So if bonds do really well, they sell the bonds and buy into the stock. If the stocks do really well, vice versa, obviously, right? So then that usually happens closer to the end of the month. But it looks like it began last week. So let's see how long this persists as well. The U.S. 10-year yield broke its upward momentum as well, which fueled the downward move on the Qs potentially. But now we can see that it's also very oversold. What might end up happening is, we might fall a little bit more, end up retesting these levels. By that time, the MACD would be, somewhere closer here. Let's see what happens. The U.S. 10-year yield is also something that Jerome Powell isn't too concerned about. So, there's not much to say on that. The correlation is also breaking, so it's not as strong with the Nasdaq as well. Bitcoin, another bad day for Bitcoin. It was very, very interesting. Like, this level of support is still holding, which is very important. This trend line essentially. So if this trend line breaks, then we're going back to 52.4 potentially. But let's see what happens. The dollar had an extremely bullish day today. It's tapping right on the 200 simple moving average on the daily. So let's see what happens here. But overall, the market doesn't look great. The SPY doesn't look great. Let's look at these larger indexes. Things don't look entirely amazing here. There's still a lot more room to go down. But the Russell is the most oversold, and we're also very close to getting outside of the Bollinger Bands on the Russell. But, because the Russell has also been winning this entire time, right? A downward move, a violent downward move, was the most expected. I said that I said that the market was going to hit 220 to 221, so I took profits on my calls, but I didn't want to go short the market just yet because I wasn't sure if this trend line was going to break, right? But it broke very, very hard today, which was very, very nice and interesting to see. If you had a lot of money, and if tomorrow you want to buy into calls for maybe like a year out, you could buy at the money IWM calls. Eventually, once this would if you bought 213 calls for 6 months out or 7 months out, once the IWM eventually touches potentially like 220 again, you're making at least like 10 to 15% by the time that happens. So, there's always that, especially on huge down days like that, like today. There's a lot of potential. All right, so now let's look into the stocks that you guys wanted me to check out. SFT, Shift Technologies. So we're at a very interesting point for this stock. I don't know much about it, but according to the technicals, it needs to hold above this trend line. This trend line's been made since November, and essentially 780 would need to hold, right? If 780 breaks, then this level between 730 to 760 essentially needs to hold. This is a level that's pretty important. After that, then it can fall back down and retest its lows. But I would be very careful with this, especially since the overall broad market is also taking a beating. I would just be very tight with this and not buy in too heavily, I guess. But the MACD is also extremely oversold, which is another good sign. It means that there's some room for it to potentially bounce off of these levels, maybe. But yeah, there's my analysis for that. LGHL, really, really interesting stock. Like, it's been moving high compared to the rest of the market, which is a very good sign. The MACD looks pretty bullish as well. You can see that the MACD is moving up. You can see that we're in an uptrend here as well, which is another really good sign. We're riding along the 10 moving average. If I drew this trend line, I'm almost positive that I would be along the 10 moving average. Yeah, so basically we're riding above this 10 simple moving average. One of the levels that I wanted to look at really for the short term would be 475. If you just bought in, for example, today, to maintain this upward momentum, 467, 466 is an important level. 466 needs to hold. But yeah, if it falls below that, then I would honestly see another, like, it could potentially fall down to like 420 to $4. So I'd be careful because we're also very overextended. I mean, it looks bullish, but if we start falling, then that would mean that the MACD needs to cool down and the stock in general needs to reclaim this level. So if we fall, I would wait for a reclaim of 466. Hims, pretty. All right, him and hers. So yeah, this really just needs to make sure. So if we look back in the history of Hims, right, it's relatively hasn't really been trading much. But this is the purple line is a 200 simple moving average. And in the past year, really, we hadn't closed below the 200 simple moving average. So to remain bullish really on this stock, it would need to hold that level. I'm not sure what numbers came out for its earnings, but it doesn't look too good. But the fact that we're starting to sort of, you see that we're starting to sort of create support potentially here, it's a good sign. And the MACD is also beginning to, it's beginning to curl up as well. That's also another good sign. So the 200 simple moving average is at 1255. This trend line would break at around 1274. So that area is pretty decent support. If that breaks, then I would look to, relook for another entry, probably maybe like $12 because there's a lot of support in this area. And then if that breaks, then we would retest the lows here at 1130. So yeah, but the overall trajectory of the stock, it could potentially go much higher. But again, I don't know what the financials are from their most recent earnings call. But yeah, if it's still a decent company, the books look pretty good. They just had a bad quarter, maybe. Overall, then potentially this would still be a decent long-term investment. Looking at the risk reward here, because it's $13, you would risk maybe like $2 for potentially 7 to 8 at least. So that's good. TRCH TRCH doesn't look that good because we broke the upward momentum 2 days ago. It also, this also coincided along the 50 moving average. So, honestly, if you wanted to go long here, 170 is support. If it breaks 170, then you need to get out of the trade, in my opinion. I wouldn't be in the trade anywhere near below it. I would just wait for it to reclaim 170. But yeah, it doesn't look good. If you want to start scaling in and have a stop at 170, that's fine. Also, another thing is the MACD is also, again, it's oversold, which is good. It might give potential to bounce off of these levels. But all in all, it broke an uptrend. So this level needs to be reclaimed. And the Bollinger Band is also, like, we fell out of it. So that's another potential bullish reason for you to, like, be happy about this, because again, like, algorithmically, institutions look for stocks that are outside of the Bollinger Band, and they use that as a return to the mean trade. So mathematically, these stocks are meant to trade within these standard deviation levels, and when the stock falls out of the lower standard deviation level too much, that becomes a good indication to start buying into it. That works. So that standard deviation, what I was just talking about, works perfectly for large indexes or large ETFs. So the SPY, the QQQ, and the IWM, whenever a stock is outside of the upper or the lower level of the standard deviation of the Bollinger Band, you can buy puts or calls for maybe 3 to 4 months out, and you would make a lot of money. That trade has never not worked for me. So that was a little bit off topic. All right, Jamia. Jamia is, the Amazon of Africa. Um, it's a very interesting stock. I actually liked it a lot, but I ended up selling it. I was long it this entire time here. Um, so yeah, it's an interesting company. I think their base is in Germany, but they're a South African company. So it's a good, decent, strong company overall. We're at extremely like interesting levels of support. There's multiple layers of support here. Um, so this trend line, it looks like it's broke a bit today, but then there's support again at 32.96, and then there's support at 31.42. Both of those levels need to hold. If those levels don't hold, then it doesn't look too good for Jamia. But the MACD is also extremely oversold, which gives potential room for the upside on the stock, and also the standard deviation level. Sorry, excuse me. The standard deviation level, we're testing the bottom of it as well, which is another good sign. All in all, I wouldn't be surprised to see if the Nasdaq falls down to 307 or 303. It feels very, very heavy, similar to what we saw on the IWM. So, but the IWM is now extremely oversold, whereas the Nasdaq has yet to really even do much in that regard, right? Which is why I'm most fearful for the Nasdaq and the Qs. So, yeah, just be careful. Um, Trade smart. Don't be emotional. You can't be emotional when you trade. Okay. And yeah, so hopefully you guys like this video. If you want me to do a technical analysis on a specific stock that you're thinking of, go ahead and drop a comment in this video, like the video, subscribe to the channel, all that good stuff, man. I hope you guys had an amazing day, and I'll talk to you guys next time.